Okay, so today I'm going to talk to you about what we call the treasury notes, and treasury notes. Market, forex, especially the forex market, are drawn to what we call the bonds, treasury bonds, because government issues a treasury bond, which those institutions, big institutions like banks, tend to acquire those bonds and invest in those bonds, because government bonds, they are secure, and they are secure. That is my point. And so big institutions and like banks and those big companies tend to invest in government bonds. So in a chart, market tends to follow interest, and areas of interest are the same, like areas of liquidity. When we look at this level here, this region, we have a significant price point, which I believe are relative equal lows, and let me mark it as red. And let me give it a thicker line like this. Right. So this region, we have a lot of liquidity. This is a treasury note. This is a 10-year treasury note, and as you can see, market is gravitating towards this area because we have a lot of liquidity around this region. So market, so this is where I would look for drawing liquidity if I was trading bonds and treasury notes. Now, if this price drops around this region, treasury notes is inversely correlated to the dollar index, meaning one is going up, the other is going down. Look, one is going down, the treasury note is going down, but the dollar index is going up. And again, how do I know, like this, at this price point, at this region, we are not expecting a reversal to the upside? First of all, we have this level of liquidity, which is point number one. Secondly, I'm going to correlate the dollar index and the treasury notes, in that if we have an SMT meaning one, it's not we have a difference in the way in the market flow, meaning one market is going down, the other one is going up. One market is going down, the other one is going up, or inverse, vice versa. Like for example, this region, this price point here, this low, the dollar index, it's the same as this price point high of the dollar, of the treasury notes. But when you look at this region, this price point low, and this price point high with the treasury notes, you can see here we created a low. We created a low in the dollar index, which market came and tapped into this order block around this region, as you can see, and it is gravitating upwards at the current moment. But on this level, on the treasury note, as you can see, this area, it was not like market did not come and take and created a high to take out this, the same as opposed to this dollar index, where market came down, took liquidity, tapped into this order block, so created a low, while this one, so there was this SMT. This is what we call SMT. So which means we are currently going down on the treasury note, and we are currently going up on the US dollar index. You can see we have relative equal highs here in the you can see we have relative equal highs, which is a draw on liquidity. So I'm expecting price to really aggressively move upward, because we have an SMT here. Let us go back to history and try to backtest, not backtesting, but try to see what I really mean by SMT. This region, as you can see, we created a lower low around this region, but here we never created a lower low. We never took out this. We created a higher low. See, this is an SMT. This is an SMT. So the same thing we are having at this point. So which means we are really moving upward. We are aggressively bullish on dollar index, and we are bearish on the treasury notes. Treasury notes, at the same time, it is directly correlated to the Euro USD majors, like the Euro USD, British Pound USD. So they will move in the same direction. So which means the Euro USD, we will be selling coming next week. I don't care if we have an election or not, though you should wait for that election date. You should not be trading during that period. But we have a lot of, I think we will be having a lot of volatility. But if you are the type of person who are a risk taker and you can't wait until election day, I would recommend you just to be bullish on the US dollar index and bearish on the Euro USD or British Pound USD. Okay, so this is my number one tool, which I normally use to analyze charts, to look for those distribution and accumulation phases of the institution or big companies, the levels in which they distribute or levels which they accumulate their okay. So that's it for this slide. Maybe I will take you back to we will analyze the US dollar index chart, analyze the Euro USD, then from now on you will decide what to do from there. You can use this to back test and test if I'm telling the truth, because this is all ICT. If you really want more knowledge, you can just go to the ICT. I think everything is there, all the knowledge is there in the YouTube mentorship, and it is free. You don't need to buy anything. So for me, I'll just be analyzing current market prices on this level on my YouTube channel. Just you can share so that others can benefit from it also. And This is the Euro USD, no, not the Euro USD, but the US dollar index chart. And as you can see, our current price, this is the previous week, the previous week candle, and this is a weekly chart. And as you can see, this was our fair value gap. I was expecting price to come down and tap into this weekly breaker, but price is really continuing. We are really bullish on the US dollar index, so it is showing no signs of retracing back into this gap. So we are really bullish. And how do I know that? So this weekly candle, market came and closed above this fair value gap, and this candle came tapped into this. Now this one will be called an inversion fair value gap. It tapped into this inversion fair value gap, and because it is inverted now, because this one closed above it, now it is inverted, tapped into this inversion fair value gap around this region. A fair value gap is a three-way candle in which the first candle and the third candle does not overlap. So this candle and this candle did not overlap with the wicks, creating a gap in the middle. So price came and retested this gap, and it is rejecting, which means it does not show any signs of coming down. And on our daily chart, as you can see, this is where all happened. Okay, on this region, this is the order block where market came and tapped. It is currently moving. This order block acted as our support. This is where we are getting that SMT with the treasury note. And as you can see, we have an aggressive bullish candle upside. So I will be expecting market to literally go up and not come down again. So this can act as our buy stops, initial buy stops, but also we have a weekly fair value gap around this region. This can also be our target, a weekly fair value gap. And if we continue, we can have this relative equalize taken as liquidity, and of course this high can also be a draw. But what you need to be focused right now is the initial price level, this high, which this current daily chart is trying to move. So yeah, so that's it for this illustration. So just backtest. You don't have to trade everything. You just need to backtest and see if these things work out the way I am outlining them. So yeah.